That is echoing the 2008 crisis, but at a terrifyingly accelerated pace. But the real story, the one that should send a chill down the spine of every citizen in a developed nation, is what this says about the shifting center of gravity in the world. For decades, the financial might of the United States and the European Union was considered an unassailable fortress, their currencies the bedrock of the global system. But the overnight skyrocketing of the Dong is a stark, violent declaration that the era of Western monetary hegemony is not just ending. It is being actively dismantled, and the tools for this dismantling are not just economic, but technological, leveraging blockchain-like settlement systems and digital asset frameworks that bypass the traditional SPOFT network entirely, leaving the old guardians of finance watching helplessly from the sidelines. The panic is already metastasizing beyond the forex markets, slamming into commodity exchanges where the price of Vietnamese key exports like Robusta coffee, rice, and rare earth minerals is now in freefall in dollar terms, threatening to bankrupt farmers and create supply chain chaos for global manufacturers who depended on that stable, cheap source, while simultaneously making the country's imports suddenly ludicrously cheap, a deflationary shock that could flood its domestic market with foreign goods and crush local producers in a different way. This single event has effectively created two parallel economic realities, one inside Vietnam, where the cost of servicing its external dollar-denominated debt has just collapsed, potentially freeing up billions for domestic investment, and another outside, where every multinational corporation with operations or supply chains in the country is now facing catastrophic balance sheet losses and an urgent, existential need to reassess their entire Asia-Pacific strategy. The human stories are just beginning to emerge of Vietnamese citizens who took out loans in US dollars, believing it was the safer bet, now finding the burden of repayment multiplied overnight, while others who kept their life savings in Dong have suddenly seen their wealth, in global terms, increase exponentially, creating instant millionaires and deepening social inequalities in a single, unpredictable sweep. The political ramifications are equally profound, as governments and intelligence agencies scramble to determine if this was a brilliant, premeditated act of national economic strategy by Hanoi, a desperate gamble to escape a debt trap or currency manipulator label, or something far more sinister, a financial weapon deployed by a rival state to test the resilience of the global system and create a controlled detonation to probe for weaknesses. The utter lack of coherent narrative from official channels is fueling a different kind of crisis of trust, as investors now have to question the stability of every other emerging market currency, wondering which one might be the next domino to fall in this new game of financial brinkmanship, where the old rules no longer apply and the concept of a safe haven asset has been thrown into utter disarray, with gold and Bitcoin experiencing violent, conflicting swings as traders seek any port in this storm. The only thing that is certain this morning is that the world we went to sleep in last night no longer exists. The assumptions that guided international business for generations have been invalidated, and we are now all unwitting participants in a vast, global economic experiment whose outcome is terrifyingly unknown, and the first shocking chapter of this new era is being written not in the corridors of power in Washington or Brussels, but in the bustling streets of Hanoi and Ho Chi Minh City, under the shadow of a currency that dared to defy gravity and in doing so may have pulled the entire global economy into its orbit. So what is the real, unfiltered truth behind this financial explosion that has left the world's experts gasping for answers and scrambling for a narrative to explain the unexplainable? The initial, surface-level explanation being cautiously floated by some analysts, that this is merely a successful outcome of long-term economic reforms and a crackdown on dollarization within Vietnam, is, all due respect, a comforting fairy tale designed to calm panicked markets, but it completely shatters under the slightest scrutiny when you consider that no amount of reform can generate the scale of vertical, overnight appreciation without a deliberate, concentrated, and colossal injection of market force or a fundamental rewriting of the monetary rulebook, a force so powerful it overwhelmed every single defense mechanism the global forex system has in place. The real catalyst, pieced together from fragmented data, whispers from the trading floors, and a deep analysis of the timing points towards a terrifyingly sophisticated and multi-pronged operation that leveraged three distinct pillars simultaneously, creating a perfect storm that the world simply could not have prepared for. The first pillar was a clandestine, multi-billion-dollar liquidity squeeze executed with surgical precision, where entities aligned with or acting on the direct behalf of the State Bank of Vietnam began methodically buying up every available dong in the offshore and non-deliverable forward markets, not with the brute force of a single large order that would have triggered alarms, but through thousands of micro-transactions routed through shell corporations in financial gray zones like Singapore and Hong Kong, systematically draining the supply of dong available for short selling and creating an artificial, then very real scarcity that sent its value spiraling upwards in a self-reinforcing feedback loop. The second and more brilliant pillar was the silent activation of a previously rumored but never confirmed sovereign digital currency, a central bank digital currency or CBDC, which was used to settle a massive, pre-arranged energy trade with a key ally, most likely China or a Middle Eastern power, bypassing the US dollar entirely and at an exchange rate that was pegged not to the market rate of the previous day, to a new, vastly higher valuation that was then effectively forced upon the global market as the new benchmark, instantly rendering all other pricing obsolete and creating a schism in reality between the old financial system and the new one being birthed in this single transaction. The third pillar was the element of psychological warfare, a masterfully orchestrated information blackout combined with strategically placed rumors of an imminent gold-backed reserve status for the dong, which created a frenzy of FOMO, fear of missing out, among regional and then global investors who, seeing the currency mooning and hearing whispers of a new gold standard, piled in with their own buy orders, adding rocket fuel to the fire and completing the trap for the short sellers, who were now being squeezed from both a fundamental and a speculative angle, their positions being liquidated in a blaze of margin calls that only accelerated the dong's ascent. This was not an accident, this was a financial blitzkrieg, a meticulously planned and flawlessly executed attack on the established monetary order designed to achieve, in one fell swoop, what decades of diplomacy could not: absolute monetary sovereignty, a drastic reduction in external debt burden, and a permanent seat at the high table of global finance, paid for with the vaporized capital of Western hedge funds and the shattered confidence in the US Federal Reserve's ability to control global currency dynamics. The genius of the plan lies in its deniability. By the time the world wakes up to the full mechanics of the operation, it will be a fait accompli. The new exchange rate will have been hardened by a week of volatile trading and will be accepted as the new normal. And Vietnam will have transitioned from an emerging market to a financial powerhouse that literally rewrote its own destiny in a 24-hour period, proving that in the 21st century, economic power is no longer just about production or resources, but about the ability to wield information technology and timing as weapons to redefine your place in the world. A lesson that is now being downloaded in real time to every finance ministry and central bank from Brasilia to Jakarta, signaling the start of a new, chaotic, and deeply unpredictable era of financial warfare where the next shock could come from anywhere, at any time. Now, as the dust begins to settle on this new financial landscape, the critical and most urgent question for every one of us shifts from what happened and how it was done to what comes next, because the reverberations of this single night in Vietnam are not a contained event, but rather the first crack in a massive dam, preview of a new world order where economic certainty is a relic of the past, and the only constant will be disruptive, state-sponsored volatility that will reach into your bank account, your retirement plan, and your grocery bill with a force no one is prepared for. The immediate global contagion is already unfolding in slow motion as currency markets enter a period of hysterical paranoia, with traders launching preemptive attacks on other emerging market currencies, perceived as potentially executing a similar Vietnam maneuver, forcing central banks from Thailand to Brazil to burn through their foreign reserves at an alarming rate in a desperate and likely futile attempt to defend their own exchange rates against this new form of speculative siege, thereby triggering a vicious cycle of capital controls, trade barriers, and competitive devaluations that could plunge the global economy into a deep, deflationary spiral reminiscent of the 1930s. For the United States and Europe, the nightmare scenario has materialized. The bedrock belief that the US dollar's status as the world's sole reserve currency is unassailable has been proven dangerously naive. And as other nations now see the playbook demonstrated by Vietnam, the accelerated move towards bilateral trade agreements that bypass the dollar will become a stampede, directly undermining American economic power and its ability to use financial sanctions as a foreign policy tool, while simultaneously forcing the Federal Reserve into an impossible corner where raising interest rates to protect the dollar would crush an already fragile US economy, but doing nothing would signal a surrender of monetary sovereignty and lead to a catastrophic loss of confidence. For the average person, the abstraction of a currency crisis in a distant country will soon become a tangible, painful reality as the chaos in the markets freezes international trade credit, causing shipments everything from consumer electronics and affordable clothing to essential pharmaceuticals and auto parts to be delayed or canceled, leading to empty shelves, skyrocketing prices, and massive layoffs in logistics and retail sectors, all while the value of your 4-to-1 core pension fund, heavily invested in a now unstable global stock market, evaporates by double-digit percentages, wiping out years of savings in a matter of days, and pushing retirement plans for millions into an indefinite horizon. This is the dawn of the era of financial dominoes, where the fall of one seemingly small piece can trigger a cascade of failure across the entire system. And the only viable strategy for survival is no longer about picking the right stocks or assets, but about fundamentally rethinking the very concept of value and security, moving towards decentralized digital assets, tangible goods, and skills that are immune to the whims of central bankers and geopolitical gambits. Vietnam itself now stands at a crossroads of its own making, enjoying a temporary surge in national wealth and global prestige, but also painting a massive target on its back. Facing the imminent threat of retaliatory trade wars, diplomatic isolation, and the immense internal pressure of managing the inflation and social unrest that will inevitably follow when the initial euphoria wears off and the reality of being an isolated fortress in a hostile economic landscape sets in. The ultimate chilling lesson of the Dong's overnight skyrocket is that the global financial system was always a fragile ecosystem built on a consensus of trust. And now that that trust has been so violently broken by one nation's unilateral action, the genie cannot be put back in the bottle. We are now all passengers on a ship sailing into uncharted, stormy waters where the old maps are useless and the next wave of disruption could come from any direction, at any moment, and your financial resilience will no longer be determined by how much you have, but by how quickly you can adapt to a world where the rules are being rewritten in real time by events you cannot control and can barely comprehend.